All right, hello, and everyone. Welcome back to AnCap Radio. We have another feature with Strategic Wealth Preservation Inside the Vault. Jeremy, in Strategic Wealth Preservation, I'm going to hand it over to you here in a moment. We've sent a few requests to Mark to speak. I think he's coming up here. I'll let you handle it, though, Jeremy. You also have approval to co-host this event, so make sure you check out your notifications as well, Jeremy. But SWP, you guys go ahead and take it away from here.
All right, well, it appears as though our jingle isn't jingling to start the show, but happy Wednesday, everyone, and welcome back to Inside the Vault with SWP, a weekly show where we dive into the world of precious metals and precious metals investing. To those of you who have joined us before, thank you for your support. Welcome back. If you're a new listener, welcome. You can find our previous episodes on AnCap Radio's Twitter account or posted on the SWP YouTube channel, along with a ton of other precious metals related content. I'm your host, Jeremy Varlow, and as always, I'll be joined by my colleague, industry veteran Mark Yaxley, in just a moment. But to give those of you who might be new a little bit of insight, Inside the Vault with SWP is one of the most viewed sources of information on precious metals investing on YouTube, hosted, of course, by Mark Yaxley, managing director of SWP. Check us out on YouTube if you're interested in starting your journey into precious metals and want to learn more, or even if you're a seasoned investor, there is something there for everyone. We're incredibly excited to expand Inside the Vault into podcast form through AnCap Radio. So thank you to AnCap again for having us on today. On today's show, as always, we will cover our weekly market update discussing the metals markets over the past 7 days, as well as top stories that we are following around the globe that affect precious metals prices. We'll also dive into our weekly Bullion Basics segment, which is a quick hitter designed to educate novice and savvy investors alike. Joining us today for an interview is Mr. Rich Checkan, President of Asset Strategies International. He'll be with us shortly for a conversation about the metals markets, and in particular, something that Mark touched on a couple of weeks ago, predatory selling in precious metals. Let's go ahead and get the show on the road here with our market update with Mark. Mr. Yaxley, how are you doing today, sir? You do have to unmute yourself.
Hey, there we go. I wasn't able to until just now, Jeremy. Doing pretty well, thank you. Really interesting week for precious metals. Even since we last spoke, the conflict in the Middle East had already broken out at that time. It intensified last week. We saw the price of gold climb $160 in total since the beginning of the conflict. Silver joined gold on that rally and is up $1.80 an ounce or 7% since October 7th. So the war premium on both gold and silver has been very, very strong. That has seemed to settle since early this week. We've seen the price of gold and silver kind of top off. And I think right now the two questions for gold and silver investors really regarding the conflict in Israel is what is the duration of the conflict going to be, and is it going to intensify, i.e., is it going to spread and become a regional conflict? So I think the price of gold and silver are reflective of investors looking for those answers. Now, despite the diplomatic efforts, the reports still indicate that Israel intends to push forward with a ground invasion and that there is potential there for the conflict to grow involving players such as Iran and Syria. The United States and other allies of Israel are quickly repositioning military assets in the region as well. So it's a very, very tense situation that needs to be monitored closely by investors, because if this does escalate, if it does step up in intensity, I would expect that $2,000 gold all the way up to $2,100 USD gold is going to be in play. And that means silver at $24, $25, $26 will still be in play as well. So I think we've established a new floor here, a price floor. But we're waiting for the next step forward in this conflict, and we'll be watching that closely. Closer to home in the United States, the House up until this morning was still in disarray for a third straight week. as the Republicans remain misaligned on the selection of a speaker, although it does look like another vote is going to take place today, so that's something to watch. The bond market remains volatile at the moment. Yield rates should be watched closely by gold and silver investors, as those will impact the spot price of gold and silver. They will react and correlate to those bond yields. And of course, there's a Fed meeting next week where Chairman Powell will either announce a continued pause or a new rate hike. And that's news that gold and silver investors, again, should be watching closely.
Thanks for that, Mark. Yeah, a lot of the same things that we discussed last week. There seems to be just a little bit of uncertainty, obviously with the geopolitical situation going on in the Middle East versus kind of the, economic issues that are being faced around the globe. So I want to bring in our guest at this time because I think he'll have some great insight into some of these things. As I mentioned, Mr. Rich Checkan joins us today, the president of Asset Strategies International, an innovator in alternative asset ownership, including metals and foreign currencies, specializing in global asset protection. Rich, welcome to the show.
Great to be here, Jeremy. Can you hear me okay?
Can hear you loud and clear.
Fantastic. Yeah, so clearly interesting times in the precious metals markets and worldwide in all markets. Everybody's paying attention to what's going on in the Mideast. And don't forget, we still have conflict going on in Europe as we speak as well that could be dragged into all of this. So what's the Chinese saying? Maybe live in interesting times. That was both the curse and the blessing. And I think right now we're experiencing the curse.
Yeah, that's an interesting one. And I often go back to that quote actually, because it's something that, you do not want to live in interesting times once you're in them. And we are certainly in them right now. And it's led to a lot of uncertainty, I think, for investors. Before we get into kind of the deeper part of the interview segment here, Rich, I just want to get a little bit about your background and about Asset Strategies International in general, if you wouldn't mind letting the audience know.
Sure, happy to share. We've been working with Mark for many years through a few different companies, so he knows us well, but your listeners may not. I'm basically a West Point grad of '87. Was doing direct sales down in Atlanta and Macon, Georgia, when I got the nod from my uncle to join his firm, Asset Strategies, back in 1996. So I've been here about 27 years. The firm is 42 years old, and we're basically a full-service tangible asset dealer. We buy and sell gold, silver, platinum, palladium coins, bars, rare coins. We don't do foreign currencies any longer, although we're very comfortable in that space and can certainly shed some insights for your listeners. But we walked away from that space. FATCA basically killed foreign investing, except for those that can, handle an offshore asset manager about 4, 5, 6 years ago. And as a result, it just wasn't worth it anymore. We concentrate strictly on precious metals now. And one of the great vaults we start with is at SWP. That's the connection.
Great. Thanks for that, Rich. Appreciate it. Jumping back to what Mark was just talking about with our market update, I'd love to get your thoughts on, what we're seeing in the Middle East and how that affects, not only precious metals, but the broader markets in general, as well as, some of the things that are going on closer to home in the U.S. Obviously, we've got a series of key economic reports that are coming out this week, including the Personal Consumption Expenditures Index on Friday, the U.S. third quarter GDP results, jobless claims, as well as the Bank of Canada and European Central Bank policies this week as well. So I know it's a lot to unpack there, but what are you looking at, and what are your thoughts on both precious metals and, as I said, the broader markets?
Yeah, so I think it's really simple, to be honest with you. I think that we clearly got a bump because of the attack on Israel from Hamas and the ongoing conflict ever since. We've seen that. There's no question. However, we've seen these type of crisis reactions in the precious metals market before. I can tell you, I remember sitting at the desk when the planes hit the World Trade Center. And that day, I want to say gold jumped $50 to $100 an ounce. And back then, that was a lot of money because gold was $200 to $400 or whatever it was. So it does have a short-term impact, but long-term, that impact recedes. If you want a long-term impact, if you want to know what's going on with gold in the long term or silver, et cetera, pay attention to the dollar. It's really that simple. If we're expanding our money supply, we're going to inflate the dollar. That's what that means, and it's going to basically take more of those dollars to buy anything of real value, whether it be an ounce of gold, a college tuition, a home, eggs, you name it. So that's what I keep an eye on. Long-term monetary policy is much more important, and the world has caught our disease of debt and addiction to it. So the bottom line is, no matter what currency you're looking in, that gold is going to be worth more. And I rather say, even at $2,000 an ounce, I pick some up now, because in the long run, you're going to be much better off. It's not a get-rich-quick scheme, but it's insurance, and right now the premium's lower than I think it will be in the future. It's pretty simple to me.
Yeah, that's great. Thank you for that, Rich. I want to dig into, your business at Asset Strategies and your ethos a bit here. And this is kind of moving more into that conversation about predatory selling in the gold market, because we discussed it a couple weeks ago on our first episode of Inside the Vault here. And, it's something that plagues our industry a little bit. And I liked, there was a line on your website in particular, keep what's yours. I was wondering if you could distill that down for me, what you guys mean by that and how you live that out every day.
Thank you for that. And yeah, there are honest precious metals dealers out there. There's no two ways about it, but there's also some sharks in the water, and they're going to be more and more prevalent as gold climbs higher. We see it every bull market rally. People that are in it for greed, don't care about taking care of customers. They have a short-term business model. They will get into this marketplace, and we've already seen it. Keep what's yours is really our thought toward taking a small amount of your net worth, holding it in gold, and preserving your purchasing power, basically cryogenically freezing your purchasing power for the future. So you keep what's yours, you keep that purchasing power. But you can extend it to our conversation today. And, one way to keep your worth is not to be bilked out of it or to be swindled out of it. And there's a lot of that going on. It comes in all sorts of different shapes and sizes. Maybe we can identify a few of them so you don't fall prey. But I've got a few pointers that I can give your listeners. One question they should ask before they buy anything ever might protect them from falling prey to these sharks.
Yeah, and that's actually a question that we're going to get to in just a moment. I want to get both yours and Mark's pointers there. Maybe, Mark, if you want to jump in here, you can chime in on this as well as it pertains to SWP, because at SWP, there's the tagline of one account, one world, as well as a commitment to segregation and allocation that kind of ties into that keep what's yours tagline over at Asset Strategies. What do those words mean to you as well as to precious metals investors?
Yeah, there's a couple of key words in there, Jeremy, for sure. I mean, the one account, one world, and this is something that Rich has spoken to me a lot about over the years, is the idea of geo diversification. So, the concept of investing in precious metals in the first place is to diversify your overall investment portfolio. And then if you take that one step further, you also want to diversify yourself amongst different strategic geographical locations. So you don't want to have all your eggs in one basket, physically speaking. You don't want to have all your gold or silver in one geographical location, because, if something were to go wrong there, whether it be government, whether it be, robbery, whatever it might be, depending on your situation, obviously you're at risk. So instead you implement a strategy where you diversify your assets in different jurisdictions. Now you're going to want to pick those jurisdictions strategically. And I think SWP over the years has done a good job of making those different options available to clients. So that's really what we're all about when we speak about one account, one world, and the simplicity of dealing with one company within that global network. But probably more important, really, especially if you're just getting started in precious metals and you're starting to store your assets with a vault, you want to make sure that it's fully segregated and fully allocated away from other clients' assets. And so really what that boils down to is whichever storage facility or even if you're doing it, at a safe deposit box in a bank, which there are a lot of reasons why you wouldn't use that, but you want to make sure that your gold and silver are segregated from any gold or silver belonging to anyone else, and that the bars and coins that you purchased are actually allocated to you. The opposite scenario would be basically you're buying a paper gold product or you're buying gold pool, and your assets are then commingled or pooled with assets belonging to other people, which opens up some possibilities that might not provide a favorable outcome to you in the future, which ties into what Rich was saying. When we talk about predatory selling and predatory deals, or clients simply not understanding the terms and conditions of what they're getting when they invest in gold and silver, these are kind of the key words and things you want to look for: segregation, allocation, certainly insurance as well. But I'll pass it back over to Rich, because I know he's got some great pointers for our listeners today about how to avoid being taken advantage of.
Yeah, so just thanks, Mark, and just to kind of pile on to what you said, we talk oftentimes about our three-legged stool, right? If you want true asset protection, I don't think it comes from a shell company in Nevis. I think true asset protection comes from not having all your assets in any one currency, not having them all in any one country, not having them all in any one asset class or investment. If you can spread those assets around, and it's said different ways over time. I mean, there's I think the five flags theory and a few other things out there. But the bottom line is spread it out. You minimize geographic risk, you minimize currency risk, you minimize investment risk, and that's how you get true asset protection. But none of those things protect you from basically criminals. And the reason I was really happy Mark asked me to join today is, I'm getting tired. I love this industry. I think we actually deliver value to clients by putting gold in their portfolio. And I'm really getting tired of having those conversations that start with Rich. I think I made a mistake. And you know full well they did. They bought from somebody that basically took them to lunch because they were novice, they were naive, they didn't know all the ins and outs, and they took advantage of them. So to protect yourself, and I could tell you stories about how they do this. It's very criminal and calculated. But the first question to protect yourself is anytime you're looking to buy precious metals, rare coins, whatever, from a dealer, any dealer, myself included, Mark included, ask them this: when I'm ready to sell, will you buy it back? You would be surprised how many precious metals dealers do not buy back. Now, Mark can tell you, because we both make two-way markets in this industry, it's some of the best business on earth as a dealer. I get to buy something cheaper than I can get it elsewhere from a client. I get to sell it, or I'm sorry, I get to pay more. I get to pay more to a client than I could if I had to work through a wholesaler. I get to sell it to a new client cheaper than I could dealing with a wholesaler, and I get to make more money in the middle. Everybody wins. It's a fantastic deal. Why wouldn't a dealer do that? Why wouldn't they buy back? And the answer is simple. They charged you way too much when you bought it from them. They charged a horrific premium. You funded all their television commercials, radio shows, four-color catalogs, and everything else. You paid for that because you paid too much for whatever you were buying, and they're too embarrassed to buy it back because then they would expose that large bid-ask spread. It's the only reason a precious metal dealer wouldn't buy back, period.
Yeah, and I mean, we certainly echo that sentiment that it's something that's pervasive in the industry. We're getting sick of it as well, and that's part of the reason we wanted to have you on today was to discuss this. So kind of digging more into that, what are some of the signs that, other than a dealer saying, we do not buy back, what are some other signs that people can spot that would set off those alarm bells that maybe the dealer that they're speaking to isn't as reputable as they say?
Yeah, well, one off the bat, if they use fear to sell something that's a rational asset like gold, that should be an indicator. They're getting your emotions all worked up. So that's just one. We'll just throw that out there. The next two are kind of interesting. So one, if they try to sell you something that you cannot shop somewhere else, okay? For instance, an obscure coin that only has limited mintage, or I'll give you an example of someone who got swindled. Basically, they came in and they said, listen, I'm new to this. I want to buy $300,000 worth of gold. Okay. And they said, great. So what they sold him, the first $11,000 they quoted were gold maples, the second most popular coin in the world behind the eagle, easily shoppable everywhere. And they sold $11,000 worth of gold to him, maple leafs, below what the market would bear. They sold them cheaper than I could probably buy them from a wholesaler. So if anybody shopped that, they would say, wow, this is incredible. They're really strong on pricing. And then for $289,000 worth of material, they sold them obscure stuff that they couldn't shop anywhere else. And their minimum or their average premium was somewhere between 55 and 60%. In the end, they walked away with bullion that was worth about $145,000 out of the $300,000 they spent. So another key is only buy material that is easily shoppable, that you can look at other websites and see that you're in the ballpark. And I encourage you to shop. Do that. Even with me, I've been doing it 40, I've been doing this 27 years. I have zero complaints. Shop me. You'll see that we're always in the ballpark and we take customer service seriously, but you got to see it for yourself. Nobody's going to do due diligence better than you will. And the other thing I'll suggest is stay away from modern issue mint coins, the proof 70s slabbed material that's really just bullion. They're all 69 and 70 when they come off the assembly line. And people will spend a few extra bucks, put them in a holder, say they're the best of the best, although they're equal to the rest. And they'll tell you that, listen, there's an opportunity to sell this for high premium later. And I guess they're sort of half lying here. I'll give you an example. A silver eagle, they'll sell for $120, $130 when it should be a $30 coin. And they'll say, but coins like this have sold for $2,000 at auction. And what they don't tell you is they had three of their reps at the auction bidding against each other to get the hammered price. That bottom line, you'll never see. That narrative will never work out for you. So they get you to spend $90 extra for a coin than you should. So be careful of any modern issue stuff. Be careful of things you can't shop. Buy mainstream coins. If they're popular, there's a reason. The mints can be trusted. The dealers carry them, and they can be shopped. And that's probably the best way to protect yourself, other than making sure they buy back.
Yeah, that's great advice. Thank you for that, Rich. And I, again, echoing what you said, when you're first starting out on this journey, ask the questions and ask them of multiple dealers, find the one that's best for you and ask all of the questions. I know you said it, Rich, and it's the same for us at SWP. Like, we will answer any and all the questions that you can possibly throw our way, because at the end of the day, we want you to feel safe in your investment. We want to advise you on how to navigate your first precious metals purchase safely, which can't necessarily be said for some of these dealers in question here. The last question I have for you, Rich, and this is one that came from one of our viewers. This is somebody that reached out to us. They had fallen victim to a predatory seller in the past, and they have a pile of these liquid coins that they purchased at these very, very high premiums. The question for you is, what do you advise as recourse? How do they go about rectifying the situation? Is there any solution for them?
Yeah, so I'm glad they want to rectify it, because a lot of times when you're a victim, you're embarrassed and you don't rectify it, and these criminals continue to prey on other good people. So one, raise your voice. Two, unfortunately, you come to someone like us who can only pay what the market is worth, because I'm not going to jack up the price for someone else and take advantage of them. So I can only pay what it's worth. So in the case of the guy I told you with $300,000, we actually got a happy outcome for him. We were lucky. He was referred to this firm, and I'm not going to mention their name, but he was referred to this firm by a celebrity spokesmodel. Right, basically. So that should be another indication. If they're on TV, they're on the radio, they can pay a high-powered celebrity to speak on their behalf. You're paying for that with high premiums. Make no mistake about it. Okay? So he had been referred to them. They took advantage of him, and they found us when the folks would not buy it back from him. And we said, listen, I want you to do two things, because I can't pay you what you lost here. You have to go back to the criminals that sold it to you and say, listen, I am on to you, and I need you to make this right, or I will raise this with the authorities, congressmen, senators, what have you. Let's get these people up in front of Congress explaining how they do business, and hopefully at some point they will stop. The other thing, as I said, reach out to the celebrity endorser and say, by the way, you referred me to these people, and this is what they did to me. Okay. In his case, the celebrity endorser actually reached out to the firm and said, make this right now. My personal opinion, he should have done his due diligence prior, and saw who he was getting in bed with. But he did reach out. They sent him all his money back when he sent all the medals back. That was a good outcome. It's the only way you're going to get anywhere near what they took from you is if you sell it back to the people that took advantage of you in the first place. But you got to let them know that you know what's going on. And if they don't make right, you're going to make a big deal out of it.
Yeah, that's great. It's good to hear that there was a happy ending. We hear about stories like these all too often that don't have happy endings. So it's nice to hear, and definitely echo that sentiment that you've got to go straight to the source and put a little bit of pressure on them to make things right, because at the end of the day, they're the ones that sold the product to you, and they're responsible for their actions. And it's great to have an ally in Asset Strategies International in this fight, because it's all too pervasive in the industry, and it's something that needs to be addressed and stopped in the end. I want to thank Rich Checkan for coming on the show today. Thank you very much, Rich, for joining us, and we look forward to speaking with you again soon.
Absolutely, my pleasure. I love doing business with good people, and I know with SWP I am, so no worries.
Awesome. We'll see you again soon. We're coming to the end of the show, but as always, we have our Bullion Basics segment with Mark Yaxley to finish up, and I know Mark wants to touch on some of Rich's points there at the end. So, Mark, what do you got for us today?
Yeah, thanks, Jeremy. I thought it'd be apropos to focus today's Bullion Basics segment on some best practices for investors to avoid, as Rich pointed out, being swindled, being taken advantage of, falling victim to paying high premiums that you're not going to be able to get back when it comes time to sell your product. So echoing some of the points, but here are my thoughts. In the past, I had always said, if you transact with a reputable dealer who's been around for a while and has a lot of positive online reviews, that tended to be good enough. But what we're realizing now is that some of these well-marketed precious metal dealers who, as Rich pointed out, are using celebrities at the forefront of their brand. If you just looked at them without digging too deeply, you'd say, yeah, this is a pretty polished company. They have been around a while. They've got positive reviews. They've got a celebrity football player or other type actor that's endorsing them, so they must be legit. But it's not good enough anymore. So here are the three things I would say. Number one, beyond just looking for reviews and looking for the length of time they've been in business, you want to do a deep dive into their product pricing, and don't accept their first offer at face value. And as Rich pointed out, in the case where the guy had invested $300,000, that initial tranche of $11,000 where he bought and was sold legitimately good product, that's a loss leader for the company. So the client was captivated by that lost lead, and then just made a very poor decision on the 90% of the metal or of his investment that he made. So very practical tip here. If you are paying a premium of above 7% for a gold product, and that's on the high end, you need to stop and ask hard questions. If you are paying more than 20%, and again, that is on the very high end for a silver product, you need to stop and dig further. There is no way you should be paying above those premiums for bullion products. In fact, you should be paying well below 7 and 20% respectively for gold and silver. Second thing is, you need to understand, as Rich pointed out as well, what is the resale value or the resellability of these products. If the dealer is not making a bid, very bad sign, number one. But if you cannot find another dealer who will actively buy or bid on those products, you should not be investing in them. You want to invest in bullion products that are liquid, not only in the United States or Canada or wherever you are, but also internationally. So always check with at least 2 other independent dealers, both on the premium, so what you are going to pay for the product, and on the buyback price for those products before you go ahead and make that purchase. And that's just good, due diligence on your part, especially if it's the first time that you're investing or the first time you're dealing with a particular precious metals dealer. And the last thing is a little bit of a soft touch. This is a little bit maybe harder to put your finger on, but you'll know when you find it, is look for good customer service or a good salesperson that is ready to invest the time necessary to educate you as you go through this process. If you get on the phone and have a half an hour or an hour-long conversation with a sales representative and you start to get a feel for who they are as a human being and they're treating you with respect and they're taking the time to answer your questions, even though you might be, asking simple questions or you feel like you're repeating yourself, if they work and they have good intentions, generally they will take that time and they will educate you instead of trying to hard sell you. As soon as you feel like you've got a used car salesman on the other end of the phone that is hard selling you products, and if you don't make the purchase today, he's calling you first thing tomorrow to try to pressure you into that purchase. Again, that's a really big warning sign in our industry. And you're going to want to try to work with companies that are certainly not taking that approach with you, because that's an indicator or a sign we've seen time and time again with some of the bigger companies in the industry that are taking advantage of people. They are hard selling people, and especially older folks. They love to get on the phone with people that are retired, and they will pressure them and offer them these ridiculous deals. And unfortunately, it costs people a lot of money. So those are my 3 pointers in today's Boolean Basics segment, Jeremy.
And awesome pointers they were, Mark. Thank you for that. And thank you again to Rich Checkan for joining us today. That is all for us this Wednesday. Thanks to everyone for listening and to AnCap Radio for partnering with us. We'll be coming to you live again next week, Wednesday at noon Eastern Time. So make sure to set a reminder when you see the notification from either AnCap Radio or SWP's Twitter accounts. Again, for more information on precious metals investing, you can visit our website at www.swpkman.com or the Strategic Wealth Preservation YouTube channel. Also, go check out Rich's company, Asset Strategies International, if you have any questions. Until next week, stay safe and happy investing.
Thank you for listening to Inside the Vault, the podcast that opens the door to precious metals. We hope you learned something new and enjoyed the show. See you next time on Inside the Vault with SWP.